Today, we are going to talk about imbalances and secrets of day trading and scalping. In this video, we'll talk about more technical aspects of imbalances so you can understand them well. We will also go beyond the charts and talk about real prices from real life. In the next video, I'll cover more examples of real trading executions and practice examples. Imbalances are an extremely important concept for me. You need to understand them fully. If you're ready, let's start. Before everything, you should understand what causes such impulsive moves. There are generally three causes of such an impulsive move, which creates imbalance areas in the price. Number 1. Catalysts. What are these? For example, news, good news or bad news. Economic data such as interest rate changes or unemployment reports. What else? It could be Fed talks, rumors, partnerships, and deals. In my best crypto websites video, I have mentioned the Crypto Panic website. I check these websites before opening a position for news and events. The second possibility is retail traders, which is quite rare and uncommon. Retail traders usually do not have the financial capabilities and time-arranged organizations to pump the price like this. Unless it's a well-organized social media group that arranges a time-based pump or dump. There are so many Discord channels dedicated to this, you won't believe it. The last possibility is the market maker. Now, this is what we are after. We do not want news, we do not want social media groups to pump the price. We are after smart money moves. We are after a low time frame, high frequency trading and smart algorithms. That is what we focus on. Okay, let's talk about the order book, not order block. So you can fully understand what is happening with imbalances. Imbalances are also called fair value gaps, but I just call them imbalances. In the order book, you'll notice the incredible buyer interest. This is an unusual amount of interest, which causes the imbalance, because there are no matching sell orders. The price rises so fast in an unhealthy way. This is called unhealthy price action. These kind of moves are caused by market makers or big catalysts like really good or bad news. Here you can see the difference between balanced and imbalanced price action. In the first example, price is balanced, a healthy move with higher highs and higher lows. All buyers and sellers are satisfied. You call this a perfect trend line example. In the second example, price is imbalanced. Price moves are unhealthy. There is no proper trend line. Buyers dominate the sellers, and sellers do not have interest anymore. Not confused enough yet? Do not worry. You're about to understand the concept. For a moment, forget about charts, forget about Forex, and forget about cryptocurrencies. Just think about your life, because price action is all about your life. Think about your favorite coffee shop. You start buying a cup of coffee for $3. This was a balanced price for so long. In time, price steadily rose up to $5 due to worldwide inflation and cost of labor. But you understand this, your salary has also risen, and you are still buying your favorite cup of coffee. However, one morning, when you enter the shop, the cost of a cup of coffee is suddenly $40. Will you buy the cup of coffee? No, you will not. Nobody will do that. Price has to come back where the imbalance started and correct it to bring the balance again. So people should buy more coffee. I hope this was clear enough. If you study economics, you'll know the supply-demand equilibrium, which is balance. Without a balanced price, you cannot sell anything. A phone manufacturer will not sell their phone for $5, and a customer will not pay for a phone $5,000. Prices should always be balanced sooner or later. Let's talk about the entries. You already know this. I'm not going to explain it again and again. The first thing to look for is big pumps and dumps. That cause the market structure break, MSB, or break of structure, BOSS. You should wait for these type of structures in a high and low time frame. Both of them should be high quality enough. People keep asking me which imbalance should I wait for, or should I wait for the order block? My answer is I do not know. However, there are risk levels for your entries. The riskiest entry is always the one that the closest to the break, especially if there are more imbalances below it. Imbalances in the middle between order block and the breakpoint have mid-level risks. The best ideal entry is if there is an imbalance and order block side by side and touching each other, or very close. This special pattern is called dragon fruit because it is the sweetest spot to enter a trade. Why do I keep saying the same thing? If you can combine high quality setups in high time frames with the high quality setups within a low time frame, you'll have the most success. I've been doing this for so long. The best results come with the combination of high and low time frames. The downside is you have to be patient. There are types of reactions to imbalance zones. There's no precision in trading. Anything can happen at any time. Imbalance could be half filled, and the price may react. The imbalance could be filled, and the price may react again. Or imbalance could be fully filled and could be forced out of boundaries before the reaction. These are all acceptable. The only thing that is not accepted, once an imbalance is fully filled, it is no longer usable again. Second and other tests carry so many risks. I also use imbalances as targets. It is a simple idea. You just open your charts with multiple time frames and identify unfilled or half-filled imbalances. In my experience, it works well. As I said before, the price has two targets, imbalance and liquidity, which will be a lesson in the future. Let's see some examples. Okay, this is a high time frame example. Again, never enter a trade without confirmation from the low time frames. Now let's see it. The break is what is called a high quality break. First of all, it is so fast. It leaves pumping and large candlesticks behind. It leaves imbalance area behind. There are not many red bars during the pump. There are strong closing points above the break. You can see the imbalance here, which is in our entry zone. I'm only interested in imbalances in the entry zones for entries. And you can see the order block easily. Again, this combo is called dragon fruit. Finding an entry in high time frames is hard and risky. This was just an example of high time frame possibilities. Let's talk about the target. You can easily see that price reaches and touches this imbalance area as a target. One more time, price has two targets, imbalance and liquidity. If you backtest the currency pairs that you trade, you will see it. This video is about technical side of imbalance, which I had to cover for you, so you can fully understand. In the next video, I'll go over many real-world examples from TradingView. For now, let's see another example. In this example, we'll combine high and low time frames. The first thing you notice is the quality of the break. Incredible. Very strong big candlesticks with imbalance areas. You can notice that there are three nice imbalances and dragon fruit with an order block. Now, the imbalance that closest to the break has the highest risk. In the middle one has the mid-level risk. and the dragon fruit has the lowest risk. But again, where will the price return? Let's dive into a low time frame to see it. You can see that the high quality market structure break in the low time frame, a very high quality one with an amazing imbalance. Today I want to talk about the best possible stop losses. We will cover so many entry examples next week anyway. Why? Because stop loss points are more important than your entry point. You can take an entry anywhere, here a hammer with an imbalance, or wait for a touch to order block. However, your stop loss will determine the fate of your trade. The most ideal stop loss is above the entry zone, which is above the deepest higher high. But the question is, can you take this risk? It all depends on you. This is something you should calculate by yourself. The second ideal stop loss is other swing points after deepest higher high, such as this one, or above your order block supply zone. The last one is the one that you place right after your entry, closest highest wick. This one, which I sometimes do, it has the lowest risk. However, you can be stopped out instantly, as in this example. As a target, you can see the large imbalance area here. I'll cover these kind of examples with the trading view again next week with much more details. Okay folks, we covered imbalances very well for day trading and scalping. In the next video I'll go over many examples so you can see the real action. I hope you subscribe to the channel and like the video. Please take care and see you soon.